Hello and welcome back to Invest with Humility. My name is Bruno. Thank you for making it until to this section thus far. I kindly appreciate. More content will keep on coming. Again, as we said, once you're done with these lectures and you've watched all of them, you'll be able to go ahead and start, either trading, right away, or if you want to practice with paper trading first. But you will have all the fundamental things that you need in order for you to start trading. Without further ado, welcome to this section, and I'm super happy for you to join us for the next chapter, which is going to be about technical analysis. Now, if you don't know what technical analysis is, don't worry. I'm going to explain it profoundly. So, in this lecture, what we're going to talk about is just going to do with quick introduction to technical analysis. So, I'm not going to go over all the material that we're going to learn in this chapter. So, we're going to be talking about charts. So, one of the things that we're going to cover will include, I'll just list them here, charts. So charts will be one of the things that we're going to cover. Obviously, you need to know how to read the charts to be a good trader, and that involves you understanding different candlesticks patterns. So we're going to look at candlesticks. Okay. All right. All right. So if you do not know what it is, do not worry. We're going to go over it. So trends. So if you have heard of all those sayings saying that the trend is your friend, we're going to analyze what trends are and what you should be on a lookout for, every time before jumping on a trade. Because if a stock is trending upward or downward, you want to make sure you're in the right direction. Okay, that's what we're talking about. We're going to go over support and resistance. We're going to go over chart patterns, volume, and why it's important. We're also going to go over moving average and indicators. So moving average, and then we will review indicators. There's so many indicators out there. We're only going to stick to some which I have used and I've had success with. Again, you'll notice this from every trader. If you ask them, they'll just tell you the handful of indicators that they use in order to become successful. You can only pay attention to so many things, at once. And most of the indicators that we use here are the ones which are really popular. And as you may know, for those of you who have tried trading, you want to use or make sure you're viewing things that other traders are viewing, because if they are viewing, then chances are, you're doing, you're moving in the right direction. You do not want to use, to do things which other traders are not doing. We'll discuss about that profoundly in the next couple of lectures. You'll understand what I mean. Yeah. So when you're looking at stocks, you have two ways to try to predict where the stock price is going to go. In these two types of methodologies that you can use are either technical analysis or fundamental analysis. So here are the two methods that we're talking about. So either this or this. Now they're all different. They're all useful, but they're different. I'll explain. So some people only do fundamental analysis and they swear by it and they do not think they need technical analysis. Well, other people only do technical analysis and they swear that fundamental analysis do not work. So we have two spectrums. My belief is that both are useful in different circumstances. Ask yourself, if, for example, ask yourself these questions, right? If ask yourself this question actually before you proceed with doing a trade. So what is technical analysis and fundamental analysis? Fundamental analysis is when you're evaluating something fundamentally. So the stock fundamentally, so how many employers does this company have? What's their tax system? What is the political environment of them? What is their revenue? Their expenses, their debt? All these things are fundamental. When you're looking at technical analysis, you're only looking at the price and volume. So you do not care anything about the CEO, or the revenues, how the industry is doing. You only care about the price and the volume and how many shares are being traded. As you'll notice as we go ahead, volume is really key when it comes to trading. Okay, so when should you use which method? So that's a big question. And should you use both methods or just one? So let me say, if you wanted to buy a house, what would you look at to try to evaluate if it's a good price or a bad price for you to get the house? What's the value of the house? Before you answer, it depends with the situation. That's the thing. So, and what do you want to do with the house? If you plan to buying the house and to flip it, the next day or the next couple of months. So if you're going to buy a house and flip it over the next week, are you really going to look at the material which was used in the house? If it's heat isolation, if it's a pipe, if it's pipes that are good, the neighborhood. No, you're just going to look at all the other stuff. If your objective is to flip the house, buy today and sell it over the next couple of months, the only thing you're going to care about is the price of the houses nearby. How much did they sell at? Are they selling or not? Is there volume? Are houses selling in this neighborhood at what price? Okay, that's the only thing that you care about because you're buying and you want to sell right away. Now, if you're buying and keeping the house for 40 to 50 years, then you won't really care if the house in the neighborhoods are not selling right away, or the prices. What you care about is this house going to last? What's the material that was used to build this house? Is it heat isolated? If you want to save on utilities, is there going to be new construction around here? All of these things are what would matter if you're looking to keep the house long term. So the same way you're going to evaluate your property is going to depend on the time horizon. So the same thing just applies when it comes to how you're evaluating stocks, either fundamentally or technically. Comes to trading is how long do you expect to hold the securities for? If you plan to hold the securities for 2 years, that is considered long term. If you plan to own the security for a couple of days or a couple of weeks, that is considered short term, and you would want to use technical analysis. Okay. So in trading, you're going to use fundamental analysis if you're a long-term investor. You want to know everything about the company. What's their prospect for the future, their revenues, their leverage, their debt, all of these things. So then you can evaluate the price of the company, and if it's mispriced, then you're going to either buy or short that security, or you usually buy it because you do not want to short a long term if it's mispriced, because you would expect the price to be in its fair value with time. Now, if you were just planning to trading intraday, are you really going to care about how many employees they have or their revenues, how much revenue they're making, or did they meet their earnings for the last 2 or 3 years, or are they going to meet their earnings in the future? You really do not care that much if you're only trading it intraday. All you care about is supply and demand. How is it moving right now? So what prices are trading at and how many shares is it trading? So prices and volume. So really, when you're going to look at technical analysis, day trading, swing trading lovers look at technical analysis because we are short-term traders. If you go to long-term, then I'm not saying you should not learn any fundamentals. You should learn that fundamentals because you're going to need to know fundamental analysis for all your long-term investments. But in terms of actually doing fundamental analysis, that's a long term. You have to consider yourself that is your long term portfolio. So really, in this course or in the next couple of videos, specifically, we're going to dig down on technical analysis really, so that you understand the chart patterns. We will also understand, what prices and what directions that you should be aware of, like what. So really, in this course, and in this chapter specifically, we're going to dig down on technical analysis so that you understand chart patterns. We will tell you what prices and in what direction you should be looking to buy or to sell. So that's going to be the conclusion of this introduction. I hope that you understood, the difference between the fundamental analysis and technical analysis. As a summary, as a recap, fundamentals, long-term investing, and technical, you are more towards a short term investing. All right, so I hope this video provided value to you. You may have heard these things and you may have been asking yourself, oh, I'm not sure, I do not know what fundamental analysis is or technical analysis is. So this is the difference. And because we'll be learning about trading over the next couple of videos, you're going to see a lot of videos based on technical analysis. So here's where we're going to focus the most. Again, we'll cover fundamental analysis in the future for those people who only want to buy the stocks they trust in, such as Apple, Tesla, and hold those stocks for like a very long time. We'll cover you both. But for now, thank you for watching. Give us a thumbs up and comment below. Have a blessed day, and bye bye.